Good morning, ladies and gentlemen. Good morning. My name is Theo, and I would like to welcome you to this morning live trading session here at Admirals. I hope everybody is doing well in whichever part of the world you are, and you are watching this live trading for today. Here we're going to do market analysis, and if we find some opportunities, we take them. First and foremost, our risk warning. Please make sure you read and understand that this webinar and live trading session is for education purposes only, and it doesn't involve any personal or financial advice to anyone. All right. Good morning, Raquel. Good morning, Cherry. Good morning to everyone who doesn't put anything on the chat as well. I hope you are doing well. Hello, Jack. I see some new names here, and it's fantastic to see new people joining us. And without further more discussion about the good mornings, let's go to some of our social media, the most important social media channels. Guys, please make sure you subscribe on YouTube channel. For those who are on the Zoom, I put it on the chat area, so you just click if you haven't subscribed yet. And please, I will appreciate to give us a thumbs up on the videos. Any comments they are very welcome. We put so much effort, really, and the whole team and myself, in order to bring up this valuable content for you guys. So we'll appreciate to like the videos we upload. If you want to leave some comments below, maybe you have questions. So I really encourage you to do that. So, and we go and we answer one by one in each comment. Then we have the Admirals Instagram channel, the page. So we put posts here, we put reels, we talk about market discussions, we do market updates. So please make sure you follow us on Instagram and also on the Telegram, guys. It's the most important when it comes to notifications, especially when we're about to go live, in case you missed a subscribe. So you make sure you're going to tune to the live sessions. Now, in regards to the calendar for today, Friday, the last trading day of this week, in China early this morning, we had the inflation rate for the year. Previously, it was 2.7%. Forecast was at a rise to 2.8%, but the actual dropped down to 2.5%. And you maybe wonder why this is in a red, and it's good when inflation is down. So why it considered as negative for the currency? And the answer, if you have this question, it's understandable, and especially if you now interacting with the markets and with the financial world. So what's happening is that when the inflation is keeping to as low as possible, then the consumers, they just go out and spend. So there is more spending in the country than more savings. So when the inflation is down, usually the interest rates are also low. When the inflation it hikes and it rises in number, the central banks, they want to increase the interest rates, so people, they are saving more money into the bank and they don't spend a lot. So that's how they allow me to say, they manipulate the currencies in each country. But unfortunately, because the central banks now, they are just printing money without needing to back any gold or any valuable asset in order to proceed to that action, then they just simply throw money into the economy. They throw notes into the economy, and it's like, with the interest rates hike or not, it's like the money, they don't gain the value they're supposed to gain. Okay, and that's just informative to you guys. I believe that many of these discussions I do around here, it's going to be very valuable for you, and it's going to help you to build a better understanding around how do the economies work, the central banks work, and so on. Later on, we're going to have the Canadian dollar to see how it's going to react to the unemployment rate. Okay, so the forecast is to see an increase in the reading number. We will see what is going to happen. Usually this doesn't create that much of turning points in the market, just this Canadian announcement. But who knows, now the markets are very sensitive to all the news. And of course, yesterday when Queen passed away, so we will see how the markets they're gonna react today, and of course on Monday we're gonna see some gaps, I believe, and all this stuff. Then premium analytics from admiralmarkets.com analytics portal. You click on the premium analytics, and then we have this morning briefing headlines. China's inflation is on slower domestic demand, aimed COVID restrictions. White House wait order to screen U.S. investment in tech in China, other countries. Fed's Powell affirms need to act strongly to fight inflation. So in the next week or so, when they're going to announce, no, I think it's the 22nd of September, something like that, when they're going to announce their interest rates, we will see definitely increase at the least at 0.75%. Ukraine forces punch forward in east, threatening Russian supply lines. Twitter agreed to pay whistleblower roughly 7 million in June settlement, something with Elon Musk as well. So, guys, what are the currency pairs you are currently trading or you want to have a look at? We're going to go to the charts right now, and we will start our analysis from the pound. Whoop. Why doesn't take it? Okay, there you are. Now, pound USD, Ernest, definitely. Now I saw your name, Ernest. Guys, allow me to share what I promised you yesterday, the checklist of how I enter the market. Just you can, after you can download it, you can take a screenshot, however, just put it in front of your desk and try to see how good it works. So it works in all time frames, but because I trade price action trading, most likely I just prefer to use it on the higher time frames. But by all means, you can use it on the 15-minute chart, on the 1-hour chart, intraday, scalping, whatever. Really, whatever you are trading doesn't matter, because this checklist is very, very powerful, because what you are combined together, it's something that most traders are looking at, and it has the highest probability when it works to give you very positive results. So pound, we mark this zone of support down here. The market clearly rejected. However, we said that we have to be careful because we are in a downtrend. As I mentioned many times, when we see these long rejections on these supports, usually the price retrace. Here we had about 130, 140 pips. Usually the following price action will retrace about 50% back. So if you had a limit order here, as I told you many times, you could have it at 50%. So here, your stop down there, and you will be now in a very good trade. I think it's about 100 pips, 130 pips. Okay. But again, we don't know how the market is going to move, because we really don't know if buyers, they're going to step in. However, when we trade this retracement trades, it's better if we try to use less risk on the trade compare when we trade this nice bearish engulfing continuation pattern, or this one here, or this high test here, this shooting star or pin bar, however you like to call it. All right, I hope that makes sense. So for today, we see some bullishness in the pound. So on the 4-hour chart, after this high, it means we have a new high. So if we take this as high, we have a new high, but we have this support, this resistance here, excuse me. Now, the market sentiment for this particular time, it's bullish. So we will wait and see what it will happen. The same euro, positive interest rates. Yesterday, it's been almost 5 years Eurozone to experience this interest rates number. So market react positively to that outcome. We had that, let's say, room to move for range trading. I didn't get involved with that because it wasn't anything that I liked, to be honest. But the long term is downtrend. We have these obstacles here now, so it's not as clear pair to trade. However, we see too much weakness in the US dollar, and this event alone drives all the pound, euro, Swiss, everything to the upside. Yesterday, we talked about the USD Swiss, and we said that for intraday trading, that will be the best pair to trade because it came from this resistance. It put that bearish, strong, bearish engulfing candle. You can see it here. The opens, it took the high, it closed there. So for intraday, small profit, small target trading, that will be very, very good. And just a sec to zoom out a little bit. So yesterday we had a rejection to the downside. Today we see the US dollar weakness. It's still bearish. So here it's a support. This support here can act as an obstacle if you are still short in this one here. We see that sellers are super aggressive, okay, but at some point, guys, when everyone is sell, who is going to left to take the opposite side? So at some point, the market, it's going to just it's going to run out of steam. So it's going to start doing its reversal like always. So on the lower time frames, yesterday we had very good opportunities. This one here at 12 o'clock. Today we will see the market how it's gonna react. So, and that's all what you need, guys. You need a handful of trades, really handful of trades a week to give you 2-3% profit. You risk 1%, you make 2 or 3. You risk 1, you make 2 or 3. You risk 2, you make 4 or 6. So, and it's a really, really good way to work your trading journey. Okay. It's not the quantity in trading, as from my experience, it's just the quality in the trades we take. Aussie definitely came out from this support, although we saw some weakness in the Australian dollar. Now the market is just retracing back. So we wait and we see what it's going to happen. Anyhow, now we are in a downtrend, so this can be a retracement. On the 4-hour chart, definitely we see this new higher high. This point here created a new low in the market, so it makes lower low. So this considered as a valid swing, and now it's looks like it wants to be break. If that's going to happen, any pullback, if you want to take it to the upside early so you can start buying. But in general, today, too much weakness in the US dollar. Okay, so all the other currencies Either they are weak or strong, they're going to just react to this sentiment. The QE came from this support, so it has higher probability to, after we close above this support, it has higher probability to see more to the upside. Be mindful, some traders, they're gonna get misleading by this swing here. And guys, let me make it very clear and very, very precise for you. So let me draw here something so you can see it. I think it's good to change the color. Okay, this color is good. Now, we have this point here, and please pay attention to this. We have this point here. We see this bearish retracement in this candle. After that, the market create a new low. That was the lowest point. The market made a lower low. You see it here, lower low. So this one here is, let's put it, so this swing here, this point here is the valid swing in the market. We see the market coming here, then make a push to the upside, retracement, and then it pushed down. It doesn't make a new low. It doesn't make a lower low than this low. So we stuck around here. And now we see the market create a high. Many traders, they will take this as a higher high because they see this high here. But a valid swing in the market, we call this turning point swings. A valid turning point in the market is the area that it will create market structure. I repeat that. It's the area that will create market structure. This point here didn't create market structure, didn't create a new low. We are in a downtrend. It didn't create a new low, and it didn't create a new high. So this is not a swing based on the technical analysis perspective, okay? This point here, it's not a swing to consider for change structure. And this type of price behavior misleads a lot of traders. I'm not saying that after this move, the market cannot make these higher highs and higher lows. I'm saying that this was the swing, the origin of this move here to create a new market structure. And this is the high, and this is the low. If one of these two will be violated by a new price, then we have a new market structure. Unless this swing is not taken out from the price, we do not have, based on technical analysis, we do not have a new high in the market. Okay, guys, I hope this is very, very clear right now, because it will save you from a lot of bad trades. Okay. I understand, Mesty, and really, Mesty, I appreciate your honesty and the courage to admit that you got down into that quite often, because, guys, the market many times is trying to distract us in a way that it's hard to understand what actually it says, unless sometimes we need some kind of mentorship, or maybe someone to do this live trading with you and to understand how to properly read the market. I know maybe you can go to other traders and they can just boom you with trades. We take a trade, we buy, we sell with it. But at the end of the year, if you open your your trading journal and you see that you override, you make, let's say, 10% profit, if you are down 10% and you took 100 trades, or you could take, let's say, 70 trades and make either the same amount of profit or losses, or you can, because you're going to filter them more, you're going to have more quality trades. So really, please pay attention to what we say here. I know that I'm not the trader who just open too many trades all the time, like maybe other people they do, but always my equity curve, it's rising steadily. When I have wins, they are big. When I have losses, they are small. But I have a lot of discipline, and that's what I'm teaching you here, and that's what I encourage you to get from me. Okay, the discipline and the market structure to understand how the market behaves. So clear, we see a swing point that create market structure. That's what our valid high is. That's what our valid low is. So unless one of these two is being taken out, we don't have any new information with any type of pattern. Okay, I see more people, they are commenting, and it's really good. I like to see that you guys get it. Okay, sorry, apologies that I stayed about 4 minutes only to emphasize this, but I know it's going to save you from a lot of bad trades from now on. Let's move on. The USD against the Canadian dollar. Again, yesterday we said that after this bearish long tail bar here, we can see some weakness in the Canadian dollar, in the US dollars, excuse me, because we came out from this strong, very obvious resistance where many selling limit orders waiting to be executed. And that's exactly what happened. So yesterday and today, so far, it looks like a good way to look for shorts. We have few opportunities on the 15-minute chart yesterday for intraday traders. Again, with the checklist I share, we wait for the impulse move, we wait for a retracement somewhere around with support, trendline, CMAs, whatever. If we see a strong price action, we take it to the downside, or we just simply place limit orders, guys, as I show you. You see this as a downtrend, you want the price to come somewhere here, so you can put your limit order here, you can put your stop there, you have 2 to 1, and that's it. Simple as that. Especially on the intraday chart, I encourage you to use this method because the stop loss are tighter, and if you see a valid swing, it's going to be either a win or a loss, and quite fast, so you don't need to wait and pay the swaps and all this stuff. Okay, so market, it went into a type of range environment now. So the deeper we go into this selling pressure, the more likely we're going to find that turning point from the buyers. Okay, so just be careful with that. What do we have here? USD JPY. USD JPY, we are in an uptrend, and yesterday we end up the trading day with this inside candle, indicates in an extensive move. You see, guys, here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, exactly 2 trading weeks without any single retracement. So today we see some sell off. We mark this area of possible support on the 4-hour chart. So we are waiting to see rejection from the buyers. If we see this type of candle here, then if you check the checklist I shared with you, all the informations are valid. Strong price action, 2 types of price actions only, bullish engulfing or long tail rejection pin bar or hammer, and we are good to go. And you see from here, if the price comes here with a strong price action, and we're going to have a relatively small stop loss, And we can target this area here, which is going to be more than 2-to-1 or 3-to-1 reward to risk. So keep an eye on this one. Pound JPY, we marked this resistance here. In this resistance, we expect to see sellers. However, we have another resistance here, we have another resistance here, and here is the thing. When the resistance is not very clear, visible, and there are other layers above, let's say, what it's the dilemma, it's that sell orders, sell limit orders can be sitting here, maybe more will be here, maybe the most will be here. So maybe this one is not the strong resistance to see some sell off. That's why for this particular pair, yes, we have this bearish engulfing now. Maybe it's better if we want to see some lower highs and lower lows instead of just trading to the downside. Let's see any other pairs you would like to see. Aussie CAD, we said that we are in a downtrend. I have my limit order here. As you can see, that's a sell limit. If the price, because I go through this bearish engulfing, and I said that usually bearish engulfings, if they don't reach the final destination, which is where is the support, usually like the pin bars, they retraced about 50%, and that's what I'm anticipating here. Maybe the price is going to just get me into the trade, and then it's going to just take it to the downside, or maybe it's going to just shoot to the upside and take my stop loss. But it's fine because I'm consistent with my trading, and I know that over the time this gives me positive outcome in a total rather than negative outcome. Let's have a look at the gold. We bounced through this. Yeah, guys, this is the gold. We are at this support zone. We bounce through the support, and when we bounce on from the support, maybe we take massive limit buy orders, which they can force the price to the upside fast as well. So yesterday and today's 2 trading days ago, we had this bearish rejection. Usually from the support, we want to see instant buying momentum, something we didn't see here. So it looks like the US dollar is dominating a lot, and maybe people, they just anticipate the US dollar reaction. But what we can see here is that the market from this bearish engulfing didn't create a new structure, and it's just trying to push to the upside. Guys, here is a lesson for you. Maybe the most valuable lesson you ever heard in your trading journey so far, either if you start yesterday or if you start 1 year ago. Again, remember the example with the Kiwi, New Zealand dollar, US dollar, and I explained the market structure. Look at this here. We have this lower low, so this is a valid swing because it created this move. Then the market pushed to the upside. Nice entry on the lower time frames here maybe, and we start trading to the downside. We approach this support, and what the market did, the market stopped and reversed. This bearish engulfing candle triggered hundreds and thousands, maybe millions of retail traders in the market because they saw we are in a downtrend. Yes, we are. They saw that we have this resistance here. So that was a support, retest 1, retest 2, for 3rd time retest, rejected with this bearish engulfing candle on the 4-hour chart, and they start shorting, and now they are scared and they try to find their way out of position. And the question rises is, so why that wasn't a valid price action set up to take Theo? simply because this move here, it didn't create new market structure. So this is not a low, this is not a high, this is nothing in the market structure, because that's the low here, that's the high, and unless we see lower low or higher high, then we don't have a new market structure. So this one here, it's the impulse move, and the market after this impulse move didn't create a new structure. So when we don't have a new structure, then what sort of probabilities we have to take trades? Who is dominating? Here we can see that clearly sellers are dominating this market. So we wait for a pullback, either with a limit, sell limit order and stop here, or with a price action for tidy stops. So we didn't have the price action, maybe we didn't even enter the market here. But when we see that this trial from the sellers, maybe these sellers here and other new sellers, it didn't make a new low, it didn't break this structure to create a new low in the market, then from this point onwards, we don't have any new structure, any new information here. So it's not something we should attempt to trade. Guys, I really hope that this makes sense to you. And from today, you understand about market structure much more than any other time. I really encourage you to, let me show you, let me share with the screen with you. I really encourage you to go to Admirals channel, the one I shared with you guys. Scroll down, go to the trading spotlight, and I've done a few webinars about market structure and price action. I think the one is this one here, what price action set up to use for trading. And there is another one, best trade, it was before the best trading part, trend reading and trading. I think that's the one here. That's the one you want to watch to learn about the market structure. Yes, that's the one here. I will share it separately with you. Please understand. Please understand this. It's crucial. Okay. And I guarantee you that you're going to be much more skillful trader, and you're going to take better trading decisions. And when you're going to see the market take your stop loss, you're not going to worry about it, because you know that you have the probabilities in your favor. But you need to know how properly to read the market. That's all. Okay. All right, guys. Thank you so much for your participation. I hope that everyone had a great morning live trading session today. I wish you to have a beautiful weekend and a nice day ahead, and looking forward to see you on Monday, same time. Thank you so much again, and bye for now.